Knowing and mastering market structure is one of the greatest things you can do for yourself as a trader. And market structure is very much simple. But if you are not careful, it is easier for you to make mistakes. Understanding market structure has made trading very much easier and simple for me. So in this video, I'll be sharing with you everything you need to know about market structure and how you can take advantage of it in order to increase your trading profitability. So in every time you open your chart, the first thing you need to do is for you to determine your trend. And whenever you open your chart, price will always be doing one of these two things. And what is these two things that price will be doing? Anytime you open your chart, price will either be in a ranging market or a trending market. For instance, when you open your chart, you can notice that the chart on your chart price is giving you a higher low, a higher high, a higher low, a higher high, a higher low, and a higher high. So an uptrend is when the price is making a series of a higher high and a higher low. So here we have uptrend, and here we have a ranging market. So this is a range, and here this is a downtrend. So in a downtrend scenario, price will be making lower low, lower low, and then lower high, lower high. So whenever you open your trade, your chart, you will always meet the price doing one of these things. So it is either the price is buying, or the price is selling, or the price is consolidating. And it will interest you to know that immediately after every consolidation, it's either the price will continue to buy or the price will continue to sell. Or there are instances price will buy, consolidate, and then break structure to this downside. So looking at this, we can say this is an uptrend and this is a downtrend. Having said that, what then is a typical uptrend scenario? In an uptrend, price will always begin the movement this way. You will notice price moving this way, it will come down, it will push up, it will come down, it will push up, it will come down, it will push up. So if we are to label this is our low, this is our high, and from here we have our higher low. So from this higher low, price will push up and give us a higher high. Then from this higher high, price will come down to give us a higher low. Now every higher low is being validated with a higher high. So if we must consider this as a structural point, it must give us a higher high, which means that this price should be able to push above this previous higher high in order to create a new higher high. The same thing is applicable to this one. You see that this push above this former zone and give us a new higher high. And looking at this, you see that this push above this one. Now this is a higher low, and then here we are having a new higher high. So this is exactly how we can identify our uptrend scenario. So whenever you see price moving in this form, we can say we are in an uptrend. And it will interest you to know that the most important structural point of an uptrend is the higher low. I repeat myself again. The most important structural point of an uptrend is the higher low. So why is the higher low the most important point of an uptrend? It is because price is permitted to create a new higher high, and before price will move to create this new higher high, it must close above the previous higher high, which means that it will take the liquidity of the previous higher high, and then now it has given us a new higher high. If it must create a new higher high, it will still take the liquidity of this previous higher high by pushing to the upside to create a new higher high. But price must not, in an uptrend, the price must not take the liquidity of the higher low. This liquidity of the higher low must be maintained. This point must remain constant, which means that price is not permitted to return from this upside and close below this structural point here. Anytime price close below this structural point, it automatically becomes a break of structure. So when price close above this is what gives us a BOS, which is what we call break of structure. So in a typical market scenario where you are having higher high, higher low, higher low, higher high, higher low, higher high, it is expected that price must maintain not to cross this higher low. Now, price can retrace 100%. Price can retrace to the same level of this higher low. Price can manipulate through a wick, that is a pin of a candle, below this higher low, but closes above this higher low, which means the trend is still valid. Because when you are considering structure and structural point, you don't consider the wick of the candle. And I'm going to show you in a scenario where you are getting confused. When we get to the live chart, I'll be showing you how you can eliminate the wick of the candle from showing. So whenever price break the higher low, it becomes a break of structure, which means that the trend of the market has actually changed. But however, in a real market scenario, it is very hard for you to have a perfect structural movement such as this. And most often, that is why after you finish watching some educational video, going through trading textbook, you will go back to your chart and find it difficult for you to mark your structural point. So, having said that, how exactly can we overcome this? Again, in an uptrend, the situation how price come like this, give you higher low, right? It will give you a higher high. Then price will come, move this way, and then come down again, and then move this way, and come down and move this way, and at times it will come down this way again and then move this way. So in this type of scenario, what are your structural points? So let us go in and identify our structural point. This is our higher low, this is our higher high, this is our higher low. Now this is our higher high, because this is what gave us this. But now price came here, gave us a higher low. But this higher low here was unable to go and print a higher high for us. It stopped here. So for that reason, we are not considering this as a higher low. So we'll now consider this as our higher low. And true to it, this higher low was able to push to create a new higher high for us. And then afterward, we have another reversal, which gave us this particular higher low. And then price push ahead again to create a new higher high, which is what we are having here. But look at what happened. True to it, price pull back and closes below this particular higher low. And previously we said price is not permitted to close this below this higher low. But in this case, it does. So then what do we do? When you realize that price have break this way, there are instances where price will just take this liquidity, just like in this scenario that we're having, and still went to give us a new higher high. So what do we do? We will mark our point of interest, which is our order block, no doubt. But we are still waiting for price to pull back. And when price pull back into this zone, instead of price mitigating the order block, it went ahead to create a new higher high. So in that scenario, this particular structural point becomes invalid. This higher low is no longer valid. Neither is this higher high valid. So our structural point now becomes what? It now becomes this higher low, higher high, right? Sorry. Our structural point now becomes what? This higher low, this higher high, and then this higher low. So all of this move becomes one stretch. I'm going to illustrate it again for us to see. So price came down, take away this, and then gave us a new higher high. So this is where we have this break of structure. So if we are to mark the structural point now, we are going to have this higher low, higher high, higher low, right? Here becomes our new higher high. And then this is our new higher low. And then the recent higher high. So what has happened was that this particular one is supposed to give us a higher high. But what happened? This couldn't give us a higher high. We couldn't get a higher high at that point because this has been broken. So all of this move together becomes one leg. So this now becomes our higher low, and then higher high, and then higher low, and then we have our higher high up there. So we can't have it this way. Look at it. This will be wrong. If you say this is a higher low, and you say this one now is a higher high, but and then you say this is a valid one, but this higher low has been compromised. So you cannot jump and have a higher high without having a higher low, and you cannot have a higher low that is below another higher low. So automatically the first becomes the case, which is this. Which is this higher low, higher low, higher high, higher high, right? Now here now, this is where the manipulations happen. So automatically this higher high becomes invalid. This higher high becomes invalid. So here now becomes our higher high. And then here becomes our higher low, and then higher high. So if we are to draw it in another form, this is what you will now have at the end of the day. You're going to have higher high, higher low, right? Now this is becomes your higher high, higher low, and higher high. I believe this makes sense. So these are some of the manipulations that happen when you come to a real chart scenario. Then in a downtrend, the opposite is the case. A downtrend is when price is making a series of higher high, lower low, lower high, lower low. So what are we saying? In a downtrend, price is moving this way. This is our lower high. This is our lower low. This is our lower high. This is our lower low. This is our lower high. This is our lower low, lower high, and lower low. So in this scenario, the most important structural point of a downtrend, the most important structural point of the downtrend is the lower high. So price is permitted to create a new lower low, but it's not permitted to take liquidity of this zone. So anytime price break out of this lower high, it becomes a break of structure. The same way it is applicable to the uptrend is what is applicable to the downtrend. So having spent much time on the uptrend, now let's go into real chart scenario. Now looking at this, let's look at what happens here. I'm going to mark out the chart and so that you can see. Price has been in an uptrend. And look at this, higher high, higher low, higher high, higher low, higher high. So this is a typical uptrend. Then look at what happened afterwards. Price now came down and began to give us what? Higher low. Sorry, lower low, lower high, lower low. So you can see this is exactly how price behaves in a real market scenario. So here is our break of structure. Because here is our higher low, this is a higher high, this is a higher low, this is a higher high, this is another higher low, and then this is another higher high. So here now we have this break of structure, and after that price begins the movement to the downside. Now this is a perfect price scenario. And look at in this case, what happened? Price was on a downtrend. Lower high, lower low, lower high, lower low, lower high, lower low. And then look at this point, price went here, but couldn't create a new lower high. You can see that. Then it couldn't create a new lower high. It came back again. Did not close below this and then went up to break structure. So in this scenario, this point is not our lower high, because a lower high is supposed to create for us a lower low. So this did not create a lower low. So where do we stop by labeling our structure? This is our now lower high. This is our lower low. Okay? So this did not give us anything. So what then do we tag this? This is just an internal liquidity being built up. So here now we begins with our what? Our higher high, higher low, and then higher high. So we can now mark this as our uptrend. Higher high, higher low, higher high. So you can see that. So this fall into all of this movement. So this is exactly how you can identify this, trying to see if we can get a very, very complicated scenario and then see exactly how we can trade it. Perfect. Now let's look at this. Look at what happened here. Okay, follow me carefully. Here price gave us, from here now we have this higher high, higher low, right? From this higher low, price went and gave us another higher high there, gave us a higher low, and then price pushed from there, gave us this new higher high. Now okay, let me put it under the candle so it can be obvious for you to see. This is a lower high, this is a a higher low, right? Now look at what this is playing out. This is a lower high, a higher high rather. It came down a little, give us this, and then it pushed all the way from there and gave us this higher high. So in this scenario, I'm looking for a perfect way to mark this so that it can be obvious. Higher high, higher low, higher high, higher low, and then higher high. This is exactly what is being represented on this chart. Now look at what happened. We say price is not permitted to take the liquidity of this downside. So let me show you what happened. Price pulled back, which means that this pullback has break this structure, right? It means that this pullback has break this structure. If you are to look at it, but that was not the case. After that, look at what happened. Price went back again and gave us a new higher high. So if we are to mark this structure afresh now, this structural point is no longer valid. So look at what we'll now be marking. We'll now be marking this as our lower high. So higher high, higher low. Are you getting it? This is our higher low, and then this is our higher high. All of this becomes our higher high. This becomes our higher low. All of this becomes our higher high. So this is the new markup that we will get in this scenario. I believe this is clear and this has been handled. So this is an uptrend scenario. Let's see if we can get a downtrend scenario. This is a very perfect one. This one is a lower low, lower high, lower low, lower high, lower low, lower high, and it continues that way. So this is exactly how you can mark your structural point beautifully well. So for the purpose of time, I don't want this video to be too long. In the subsequent video, I'll be showing you where you can buy and how you can buy as well, which is lead us to identifying our point of interest. The essence of analysis is for you to get an entry point. So in the subsequent video, I'll be sharing with you where to buy, and how to buy. If you have find where, then how do you make entry? How to do both buy and sell, and where to do that. That we'll be doing in our subsequent video. So thank you for watching to this time, and do not forget to give this video a like, share, subscribe, turn on your notification bell, and so you'll be the first to get notified when we upload our next video. Thank you, and see you in the subsequent video.